Powering on. Mic
Yo,
on.
test. Okay, so I was gonna show you real quick how I plan to trade. So basically this is my plan. It's very simple. In the morning. So I did like I showed you in the last video. I look up what stocks I'm watching, and the funny thing is actually I don't even have the stock I ended up trading on here. Because I kind of change my plans later in the morning. But I'll show you basically how I do it. So in the morning, the two hot stocks I was watching, actually three, I was watching mRNA, SHAK, and HD, which is Home Depot. So basically, what I did was I found the stocks I liked. So for Shack, if you pull up a daily chart, you can see the 6630. That was my R1. Um, so R1 just stands for resistance one. People think it's pivot points, but I just call R1 because that's just my first resistance. So instead of calling it resistance one or my first line, I just call R1. But R1 was 6630, right? So they had their news, their Q4 earnings were in. They kind of everything was a fail. Um, Things didn't go as good as they thought. But so here's the thing, like I'm looking for hot stocks, like stocks with earnings, but I don't really look at what the earnings were, or I don't really dive into this stuff really at all. Basically, I just watch the charts and let the chart patterns and the price action tell me what to do. So even if the earnings were amazing, sometimes you'll see really good earnings just get sold into, and they just tank. So it's like, um, so it doesn't really have too much weight on what I do, so I don't go in with like a really big bias or like I'm looking for longs. I'll put out my lines, and if it's good news, I'll look to long it into a line, or if it's bad news, I'll look to short it into a line. But if the price action tells me I'm wrong, then I'll look to just flip my bias and look for a long, even if it's bad news, or a short, even if it's good news. So that's just a little tidbit. But so basically, what I did this morning was this was the daily. Of course, in the morning we didn't have this much info. All it was is down here. 6634 was my first line, and then I had 72 on there as my R2, which obviously I never thought it was going to get up here, but that's just the second big resistance I see. So we'll go to a smaller time frame. So at the time, all you could see is, this is what I'm planning it. So basically what you could do is you got to look at this and say, okay, one, where's a good risk reward spot? So risk reward meaning how much am I going to risk? Like where's a good area to lose to stop out? And then how much am I going to make? So where's a good area for profit targets? So basically how you do that is you look to always, if you're going to get into a trade, always use a support or resistance line. So a reverse or a breakthrough, and I'll show you in a second my trades so you can kind of understand what what I was doing. So um, here on this shack, so that big resistance line, as we saw right here, so it gapped below that. So a lot of times when earnings happen, it'll gap in a certain direction, right? If it's bad earnings, it'll gap down. Good earnings, it'll gap up. So a lot of times, what it'll do is it'll gap down, and then right off the open, it spikes up, and then it'll continue in the direction of the trend, which would be down in this case. So I like to short those little pops. So at the open, everything gets crazy. It'll shoot up real quick, shoot down all around, but a lot of times it'll shoot in the opposite direction of the gap, and then kind of run back. Let me show you real quick a couple examples actually of that, just so you can see what I'm talking about. Okay, so target. Oops. So here is a good. Ooh, yikes. Sorry. Okay, so look at this. Stock gapped up, right? Big gap. This is AMD. Big gap up from 29 to 31.50 ish. Now look at this is the open, right? It shoots up and then tanks. Nice tank right to my 3150, right to my big line. You see that previous high? That's why I liked that line. Um, right to it and then shoots up. So it kind of ran the opposite way. Um, that's the same trade. It's a weekly chart. I don't know why that's on there. Here's another one. So big gap up, right? Pre-market lows on the open, washes down, hits the line and pops. So it's just kind of it's something that happens. Here's probably the best one of them all. So you have, where's the open? I cut it off when I actually printed this out. Okay, here's the open right here, 930. So look, you have a nice up move, and you're hanging out up here. You have this resistance, this support. Well, right at the open, right here, market opens, the opening wash, ramps, runs down hard, hits here, and then you get that nice move up that continues the trend. So that's just what I was saying. So that's kind of a rabbit trail, but basically that's what I was talking about. So for this one, um, if I was making my plan, I would say, okay, I like the resistance at 66.30, so I'm planning on shorting at 66.30. Well, if I'm wrong, and you always need to plan out if you're wrong. So if I'm wrong, where should I get out? Like where would be a good place to get out? So why you use above a support line is because if it breaks above the support line and can hold above it, your reason for entry is now gone. So if it breaks above the line you thought would hold it, then your reason for entering the trade is now you don't really have a reason. You just need to get out now because it's proved your trade wrong. So then you just exit, and the point of it is to try to exit with a small loss. That way, when you win, a winner can cover a few small losers. So you can win half the time and still make money, right? If you lose 20 cents but you make $1, well, you can lose 5 times for every one winner and still break even. So that's why you look to short into resistance and long into support. So basically here, um, obviously I know what's going to happen, but what I do normally is I look for if it's going to break, especially in large cap that moves a lot. So if you look at this, you'll hear people say ATR. So ATR just stands for average true range. So if I pull this over, the ATR of this stock, meaning the average range of it, is $2.50. That's just an average range, and that's just on a normal day. Today had big news, so you got to give it some room. So if you're shorting it, I'm normally having a dollar stop on this stuff. So um, I was looking to short it there, but I was watching other stocks and just didn't trade it. So it did actually what I was thinking, but I just didn't play it. But popped into 66.30, actually pushed up to 80, so you were down 50 cents. Pretty normal, like I said, in these stocks that move that much, you're gonna have like a dollar stop. Because if you look at, you took that short. Look at, I mean, it was worth. You could, if you had a dollar stop, 66.30 went all the way down to 63. That's a $3.50 move. Obviously, you wouldn't have got the whole thing, but you easily could have got $2, which is 2 to 1 reward to risk. So that's not bad. So basically, what I do too is I look. So now look for your exit. So you want to have a good exit too, right? You don't want to just have a good stop and then have it just a wing exit. So then you look for support lines. So oops, shoot. So if you're shorting here, 66.30s, you're gonna want to stop, dollar or I would say I had it here because above this little swing high. If it gets above this little resistance, I'd just be out. And then you have this big low here, and then you had a little bounce, nice little resistance here. So you can gun for there, which actually is perfect. That I think it actually yeah faded a little bit lower, but basically held in this range. So you could so that's kind of what you look for is like look at support resistance. Like I said, it works so good. So you use support resistance for your entry, for your exit, for your stop and for your take profit. So look at me. If you had target one, target two, look at that. Bam, bam. You had been in it for a long time. That was a slow fader, but you know, conformed perfectly to lines. So I'll show you my trades today and kind of show you what my plan was. So let's look at the daily chart of Home Depot. So Home Depot had earnings today, and I think they were actually good earnings. It's funny because I was shorting them. Home Depot. Yeah, Home Depot. Okay. So Home Depot's shares trading higher after the company reported better than expected Q4 just fourth quarter earnings per share and sales results. So let's see. Home Depot dividend from 136 to 150 a share, which is good, I guess. EPS 228 beats their estimate of 211. So, right, everything's good. They made more money than they thought. Their earnings per share was higher, so everything was good about the stock. And this kind of goes back to what I was saying about not caring about actually what the news is, just using the news as catalyst. So the news is more than anything is just a good way to get people involved. So look, average volume, and sorry if I'm going over a lot of stuff, but average volume. This is why I trade stocks with news, okay? So even though I ignore the news a lot of times, or I look at it, but basically I just focus on the price action because look, average volume of the stock is 5 million today. Holy smoke! I'm an idiot because I was looking at this reverse. It actually traded less than the average volume, which is crazy. Let me see. I don't think that's true. Okay, yeah, that was just wrong. So it traded. So average volume is 5 million. I was gonna say, holy smoke, I'm way wrong. So I'm not wrong. I'm right. Average volume in this thing is 5.1 million shares. Today, it traded 8.1 million shares. So it traded well over its average daily volume. So it just means you have more participants in the market and there's more people trading it, more volume. It's going to have better moves. I mean, look at this move compared to some days, right? This is just a normal day, right? Look at that garbage. This is like what you want. So they get very directional when there's news. So basically, I had this is a big line. This was very far away. I mean, it opened way up here. So I'll get down to a lower chart, and then just so you can see my executions and stuff. It's hard to even see like that. So this is the best chart for it. Okay, so look, we had this big gap up. Remember, I said a lot of times after a big gap up, you get a nice wash. So that's what my first trade was. So we have this gap up. We're sitting up here pre-market 9:30 opens, and then look, you get a nice wash down, and then I hit right here. I short actually a little early. I screwed up and I was trying to put in a manual order, but I actually ended up just hitting the offer and it filled me bad. So I was trying to get it at like 30. 30 was where I was trying to put my order, but it's fine though. I mean, it looks decent now, but that's a pretty good amount off the line. So that's another thing, not to get all off the point, but you got to give yourself a little bit of fudge factor because not all the times it hit the line. So if you had let's say you had your line right here, if you had your order on the line, look, you wouldn't even got this trade. Didn't even, would have missed you by 10, 15 cents. So you got to watch it, and sometimes you got to be willing to chase it a little bit, or just put your order, 10, 15, 20 cents ahead of the line. So basically longed here. Um, Up here, I started seeing it slowing down, and if you could see, look exactly where it started slowing down, right there. And so I took a little bit into that resistance. Um, and then it pulled down a little bit, and then it kind of traded here. This is our minute candles or 2 minute candles. So it traded here for a little bit, and then I changed to a minute so you can see. So here's what my plan was. My plan was to get in here long, and actually, like I said, I got a bad fill, so I should have been in lower. But my stop was going to be right below these lows. If it's after this entry, when it pops up here, if it pushes a new low, I'm out. So I would be taking like a small loss. And if it didn't ever stop and just kept pounding through, I would have just taken a quick loss. So as far as my stop goes, my stop range was right around this line. I'm kind of watching the tape, watching the orders, seeing how it reacts around this line. If it just pounds through this, just tons of sellers, I'm just going to get out real quick. But it slowed, started slowing. That's why I chased it. And it started running up, and I hit it right before it ran up fast. So I took this one, ran up, started slowing down on the tape. So I took little triangle is just me covering. So I covered a little piece right here. So not the whole trade, but a little bit of it. And then my plan was, well, if it can break above this resistance where the tape was, there's like a nice little fight on the tape right here. Um, if it could break above this little high, I actually added a little bit, and it's a small little add, but I'm just kind of was playing around right here. It was just a small add, but longed here at 97. Was trying to take a little bit up here into 50s for 50-cent gain, but I just got slowed down. So I took, like a 20-cent little profit. So I took another little piece here, and then I started seeing it really. So see this stall, stall, stall. This line right here, these two lines right here are called VWAP. It's volume weighted average price. So VWAP. Look that up. Just look up VWAP. But it's, as you can see, if the price is below it, it actually acts as a resistance a lot. So there's a million YouTube videos on it you can look up. But popped in here, couldn't get above it, and was selling a lot. You see the like two stall candles here. I'll zoom in a little bit so you can see like stalled, and the tape was really heavy. So I actually hit out here, and then I was like, I'm gonna just zero out the rest of it with this piece. I was like, and then I just saw the tape acting. I was like, nope, I'm done. So I got out, which is good because it washed all the way down to the bottom of the channel. So now I was out of that trade completely. So my plan basically on these is to watch for selling. Watch to see if people start selling into it. And again, that's what I was saying about recording your screens because it's hard to learn. And maybe I can make a separate video on like what that is. But dude, it just takes a lot of time of watching it, watching it, watching it. So then you see this consolidation. So I saw this consolidation. Consolidation just basically means this. Like couldn't break. I mean, look at this. Comes down, comes down, comes down. About it just keeps bouncing, right? So more and more you're seeing this level be very important. So if it could get below this support line, I thought we can get a fast wash. So the support line was basically 43ish. So it was a little higher than 43. So I could have shorted earlier, but I wanted to give it, I wanted to give it below this line. So I figured if it could break this, it's gonna probably run pretty fast. So so I put in a stop order. So basically, if it goes down, it'll just trigger me in real quick, so I don't have to manually do it. And waited. And my plan was, if it broke this line, I'm shorting, and my stop loss was just kind of back up in here a little bit. I would want to see price action. Um, on these kind of things, rule of thumb, you could give yourself like 50 cents ish on this stock. Yeah, probably like 43.50 ish is where I was thinking. I'll probably just get out if it breaks up, and if this is a false breakout. But it didn't. Luckily, it broke it and washed pretty fast. Um, and luckily, I had a nice little trade. And actually, real quick, I can just let me see if I can find that trade. Um, oh, that's the video right now I'm making. Okay, so let me see. So you see on my right screen? So I have my orders in already. So I was just screwing on my phone. Shouldn't have been, but so you can see it just hanging out, hanging out, hanging out, hanging out, and then oops, oops, there we go. So watch. I'm just playing a little bit so you can see kind of what the action was. So as soon as it gets me in, I'll lean forward and I'll be changing this my orders and stuff. I was training really small. So you'll be able to see it run. Oh, you know what? I just realized when I was talking about you. Oh, no mind. You can see now. So you can see it pushing down and see how it's not popping up. It's holding those lows pretty good. Just holding there. It's not pushing down and popping right back up. That's why I was pretty confident holding it. So, so I was just watching it, watching it, watching it. I was trying to be patient, but it's one thing I'm still working on is actually being patient and not just taking the trades really quick. So I think I took some off. Yeah, right about there. It was a dollar profit. So I took a quick buck on this trade. So my first piece, I should have. Yeah, it was. I was covering into my support line. I mean, it's easy to say I should have held it longer, but you know, still improving on that. But I'm kind of way off topic as as far as planning your trades go. But I wanted to just show you this because it just shows you like trade planning in real time. You just when you get in, you gotta have an idea of where you're gonna get out, and you gotta have an idea of where you're gonna take it, or else your emotions get the better of you. So I had a plan for this trade. I had a plan for this trade. Your stops should just be right on the other side of that support. Just be a little bit, give yourself a little bit of fudge factor. And if you get stopped out and it starts to look good again, well, there's no shame in getting back in, but you don't want to just have this big old stop. Because then if you can win 10 times, but you lose once and you lose all your profits. So there's definitely um, it's definitely a learning game, and you gotta figure out what to do. You gotta improve and learn how to do it. But at the end of the day, like just keep your stops tight. You might get shook out of stuff. You might get stopped out and it runs you in your direction, and it sucks. But it's just part of the game, dude. Yeah, see, about to break. Yeah, breaks a little. As soon as it washed that, I covered some. And then I covered the rest pretty soon after. I wasn't very patient with the second piece. You still see the sellers though, pretty strong. But you see the support line I was covering into. I pulled it up so I could see like there's a support line right here. So I was like, so there I just took the rest of it just because it was in my support line, and I was like, you know what, call it a day, baby. So anyways, that's basically what I do for planning my trades, dude. It's not rocket science, nothing crazy. Um, I could have shorted again, so like let's say later in the day, it pops back up here into my line again. Like look at this, right into the line. You have to kind of fudge the line. The line kind of became this up here, but look at that, pops right into it. You could short it again. Well, you have your stops a little bit above the highs, and look, tanks, comes back in, shorting versus the same line. Well, if it reached up here last time, you probably don't want your stop down here, right? So you put your stop above these highs right here. You see these highs up here, throw your stop in here. Bam. You're probably pretty good. If I was trading this, if I was shorting here, I'd have my stop like what's this high? 243.57. I'd have my stop like 243.60. I just have it right above it. And if it pops above that, I'm out. And, I don't feel bad about it. Even if it turns back down and shoots back down. If it does do that, I'm going to watch it and maybe even get back in. But you got to be careful there because you can get chopped to pieces if you're not careful. So, anyways, dude, I mean, look at this. Like, this is just the support resistance stuff. Like, look at this. Stopped right here. Look at where the second time it came down here. Look. Boom. Stopped exactly the same spot and bounces. Like, and then look at all these lines. Respected this line so well. Look at breaks above it finally. And then look at comes right back down. Right to the line. And then runs up. So, like, that's what I was saying. And look where it stops here, bro. Like, you can't make this stuff up. Like, it comes right up into this line. Remember this line I used to short or to cover my first position? You know, this zone. So obviously lines aren't always perfect as far as to the cent, but you call this a resistance zone. Pops right into it. Bam. Back down. You know what I mean? Breaks back below this line and then look at right into it again. So like, and then look, this line we were talking about, look at it, comes back down and just consolidates on it. And then when it breaks it, look at pounds down. And look where it stops. This line I had over here. So like, that's why lines are so important, dude. Like, I mean, it's just very, it's not easy, but it's simple, right? This is the low. Look at bounces off the low, bounces, you get a nice move. It's like that's what I'm saying. Like, just get on your charts, dude, and just write lines, just draw lines, and you can draw like trend lines, like diagonal ones, like lower highs, lower lows. So that's a not to make this video too long, but I'll go into this real quick. So, um, so here's something that's really important. So I'm gonna actually do this. Well, actually no. Check this out. I'm just trying to get a draw tool. It's easy. Okay, I can't figure it out. Whatever. But look at. So this is very important. So the concept of higher lows and lower highs. So look at this trend. This one we're gonna use this trend because it's much easier. But if you look, this is a high, right? This you can consider a high, and then this puts in a low, right? This pops up. This is a high. This is a lower high. So this high is lower than this high, right? It turns. This low, this is pretty much the same. So it hasn't put in a new low. So it's just hanging out, right? And then look, puts in a new low. So if a stock is making lower lows and lower highs, so if they can't push above the previous high, that's considered a downtrend. So you can look at this stuff in like bigger picture, right? So swing this high, low, swing high, low, right? And then you can get into the smaller moves as well. So swing high, swing low, swings high, but it's a lower high, right? And then this is kind of just all blah. This is just consolidation. And then look at puts in a new swing low, puts in a new swing high, and then another consolidation. But then look, cracks this high, and then puts in a lower high. So this is a short-term uptrend, right? And if you look at even smaller, and again, I'm not trying to confuse you, but look, lower high, or there's a low, it gets a little higher, lower high, or I'm sorry, higher low, pushes up, breaks a little bit higher, and then look at another, it's even higher low, breaks higher high, and then the low is higher than this low, right? Each low it keeps going up. So if you were to throw a line, like each low is higher than the last low, right? So that's considered a short-term uptrend, right? Until it breaks this. So this is a short-term uptrend until it breaks the previous low. So like look, we have that, and then look, we have the high. So if this trend is going to continue, it needs to push up past. It needs to push up past this high. So this move needs to push up past this high. But look, it's stalled, and then look what it does. It cracks past this low. So now you're past this low, right? So now what's the market doing? Now the market is making lower lows and then higher lows. So now look at where this high puts in this high, which is obviously much higher or lower than this high, right? And then look, it makes a new low and then pops up. This low isn't as high, or this high isn't as high as this one, right? So new higher low, or lower high. Sorry, I screwed that up, but you see what I'm saying. And then look, it pushes the new lows, and then look, pops lower, pops lower. This pushes up a little above this, but this is more of a consolidation, so you actually would probably consider this the last swing. But so still lower. So I'm showing you that. I know it's way off of making a plan, but those are very, very crucial when setting stops, when setting um, entries, when looking at a trend, when looking at a market, because you don't want to. So look at Home Depot, like I was saying. Look at Home Depot had good news today, right? The news was great. Everyone should have been buying it. Well, it did gap up, right? So this was where it closed the day before, right? So anything above this is a good day for Home Depot. It's plus, it's in the positive. So look, when it pops down and when I've longed it, if it was going to be an up day, it'd have pushed past this high. But because it's stuffed here against VWAP, stuffed just means didn't go up above it, just kind of came back down, and then consolidated right here, like that doesn't look strong anymore, does it? It's like, if this was strong, it'd be running up, it'd be putting in higher highs and higher lows, and it'd be just ramping. But instead, it has a hard time even breaking right off the open, has a hard time popping any, and then just kind of starts dying off. So that's why my thought process was, okay, if it can get below this consolidation area, I think it's a short on the day. So look at, if it had popped, if it had started running up, it looked fine. It looked great. Consolidation is not a problem. So consolidation is just considered um, consolidating is basically just like a thinking period. So it can break out either way. That's why I don't really take trades during this. Now you can take trades, channel trades. You can long here, short here, long here, whatever. But normally you do it only one direction. But I don't want to get into that right now. But what I was doing was watching for this low to break because this was very important for the stock. All these people are watching. All these people are thinking, oh, this has such good news. It should be going up. And then when it doesn't and it consolidates like that and then it breaks down, that's when people are gonna be like, "What in the world? I thought this was good news." So that's why I took this trade, because you have a lot of longs. You have a lot of people that are long. They're selling because they want to get out. They're stopping out. So when they sell, it causes it to go down, and then you have a lot of shorts like myself hit, pushing it down. So it's just a good risk reward trade. But like I said, watch those, get on there and just draw lines, man, and pay attention to these lower highs and these higher lows, and watch the trends change. Watch it, watch how it kind of ebbs and flows, and it's down here, then it's up here, then it's down here. And remember, like, all this looks so big right now because we're on the 1 minute chart, right? This whole day, this move looks big, but that's why you got to look at it from multiple time frames. Because now look, this is a 15 minute. Look, this is a 30 minute. This is all just a consolidation, right? Look at the 60 minute. Like, this is all just kind of a crazy consolidation. This, look, clearly still in this big uptrend, right? So like, that's why you have to look at the bigger time frame. So start with the daily. Look what everything looks like. I mean, look at that big uptrend right here. Start with the daily. What does it look like? 30 minute. Okay, where's the big lines? 5 minute, 1 minute. Go down and kind of just find out what you think about the stock and really try to get an idea for what it's doing, and try to figure out where it's going, and try to think, if I was a buyer, where would I get out? If I was a seller, where would I get out? Stuff like that. So hope that helped a little bit, dude. I know I kind of rambled and I went on a ton of different rabbit trails, but hope I helped a little bit. And let me know if you have any questions, dude. Peace.